Earnings chaos in stocks. Hey everyone, it's Wolfgang. So this is a story about the capital expenditures that have been hurting stocks and our investments. If you've been watching your stocks and you've been wondering why they've been dropping, this will answer that question. As an example, today Alphabet, Google announced their earnings. Google's a hyperscaler. They have a cloud service, Google Cloud, that they rent out their AI hardware to corporate clients. They've been spending a ton of money on AI hardware. Investors are not seeing the return on investment with all that CapEx, capital expenditures. And so even though Google announced some good results, the excessive capital expenditures on AI hardware, their stock dropped almost 5% today after they announced earnings. There's really no existing positive return on investment on all the AI hardware spending. That's the real problem. So even if Google has great results in their cloud business, if they're spending too much on something that doesn't have a documented rate of return, people are going to sell the stock. They're not impressed. People have started to scrutinize all this spending. Investors are becoming skeptical and scrutinizing all the CapEx spending, the capital expenditures on AI hardware. Another example, the chip sector. Chips are down. Return on investment in artificial intelligence, again, it's no documented case yet that shows it's a runaway success. So the chip sector, also known as the semiconductor sector, entered a bear market at the end of last week. The SOX index, which is the Philadelphia Semiconductor Index, has fallen 24% since last month, down 24% since June. This is the chip sector's largest drop for a week period since March of 2025, over a year ago. So here's what's happening. Okay, the reason our stocks are dropping. Investors, including us, were getting skeptical of the return on investment of all the spending on AI. So when we find out that a company, even a good company like Google, is overspending on AI hardware, we assume, because there's no return on investment, that they're asleep at the switch. There's something wrong with the spending. If it's not making a return, why all the spending, right? So this is affecting the chip sector, because when companies can no longer bluff investors that all the spending they're doing is legitimate, when they can no longer bluff that, it becomes harder for them to spend the money on the AI hardware. So that has been affecting AI chips and memory, which have both fallen. I'll show you a chart as we go along here. So one of the biggest problems is cheaper competition from China, AI competition. I will dive into that in more detail just below here. So investors are scrutinizing the capital expenditures by companies, and so it's not helping companies justify the decline in free cash flow. Free cash flow is money left over after expenses. When you're spending a lot, your free cash flow drops, because free cash flow is money after expenses. If the expenses keep growing, it crowds out the free cash flow. All right, so this is a chart that shows in green, the green line is the hyperscalers, including Google. So if you check out their free cash flow, it has been dropping significantly. All right, so investors are noticing that, they're scrutinizing that, and they're saying there's no return on investment, at least nothing documented, solid documentation that all this spending on AI is helping the bottom line. There's no documented argument for that. So all the spending the hyperscalers have been doing, it was going to the semiconductor companies. That's the purple line, was. So if you notice, I crossed out is. So the semiconductor index, the memory stocks, they're in tough shape. So all the spending, and I said before that these two lines were going to converge. They're starting to converge now, because hyperscalers can no longer bluff investors that all the CapEx is justified. They can't bluff them because there's no return on investment. And so the semiconductor companies are starting to fall off. It's not shown in this chart, but this line will drop. This line will start to rise as the free cash flow starts to increase. These two lines will converge, as I mentioned previously. Another sign that there's trouble in stocks, we're all invested, if you're invested in an index fund, SpaceX is part of that now. It's down to 115 today. SpaceX dropped to 115 and small change. It's on its way down to $100 a share and less. Okay, Morningstar analysts put a price of $63 a share on SpaceX, not based on hype, but based on discounted cash flow. Discounted cash flow takes a look at the projections for future cash flow and maps them back to the present time, discounting them using the interest rates, the expected interest rates. So they analyze SpaceX earnings and they project $63 a share is a fair price. So this 115 is still high. It's going to drop. And we predicted this a while back that SpaceX was going to fall to 100 or below. It's time to get real on the hype and hope valuations. They're not real, okay? Because earnings of companies justify the stock price. Earnings, not hype and hope. It doesn't matter how good you are at marketing or trying to sell something that doesn't yet exist, how much charisma you have, it doesn't matter. The numbers matter. Show the numbers. We will decide what the stock is worth based on your earnings. If you don't have the earnings to justify the stock price will drop, and that's what's happening to SpaceX. If you're running a company, this is the time to start refocusing on return on investment. If you do any CapEx spending, it better have a rate of return, or investors are going to say, you're spending money that has no good return, you don't know what you're doing, you're out of control, your stock price, we're selling the stock. It's not a good investment. So if you're running a company, it's time to start showing return on investment and being efficient. Investors are less willing to overpay for any stock just because you're good at the hype game. There are some people in tech who have gotten good at hype and hope, projecting, charisma and stage presence and all that stuff that's got nothing to do with real numbers. Set aside the public persona, show me the numbers. If you're not making great earnings, we're going to set the stock price accordingly. So that's what's happening. Make money or just forget it. The numbers matter. The hype and the hope do not matter. So here is one of the biggest challenges in tech right now. Cloudflare. We've all seen this. I'm going to show you what Cloudflare is doing online. We've all seen this. Cloudflare is blocking AI training bots. So if you're invested in a company that is throwing money at artificial intelligence, the training is going to start getting a lot more expensive, okay? Cloudflare's new policy is going to push AI companies to pay for content. No longer are they going to be able to steal it, okay? So training AI LLMs is expensive and time-consuming, and until recently, the large LLM companies have been scraping data from the internet for free. They've been taking data from websites and training their system for free. The big problem that Cloudflare is solving is this. If you create a website, all right, and you have data that is supposed to attract people to your website, but an AI bot comes and takes your data, it gives users another way to see your data and they will stop coming to your website. So your traffic numbers drop. If you're making money on ads, for example, and you're no longer getting the traffic, that's going to hurt your website. So Cloudflare is coming to the rescue of websites and saying, AI bots have been stealing your data. No more. We're putting an end to that. So you've probably seen this a lot. Prove you're a human. Anywhere that Cloudflare is blocking AI thief bots. Starting on September 15th this year, a couple months from now, less than a couple months, Cloudflare's default settings will block mixed-use crawlers. That means that crawlers that blend search, AI agents, and AI training will be blocked. So they have some time to make deals with websites. The LLMs have a window to approach content providers, the websites, to say, okay, we've been stealing your data. We're willing to pay for it now. Cloudflare will be at least one of the intermediaries. There may be other intermediaries, but Cloudflare is saying it's time to protect the website creators, those who provide all the data that's been used to train AI systems, that has been stolen to train AI systems for free. It's time to put an end to that. And this is what we've all been seeing, right? Performing a quick security check, verifying Cloudflare. So basically what this is doing is it's verifying that you are not an AI bot. So some websites are already putting up the hand and saying, we're no longer going to let our data be stolen by AI for AI training. So here's the problem this creates for LLM providers. They need the most up-to-date data to be to have a compelling reason for people to even use them. They're not profitable. So is this really going to help their profitability? The only thing it's going to do is, there's going to be a reduction in the number of LLM providers. There may end up being like one or two. That's usually what happens in a market. There's like one big player like Coke and a secondary player like Pepsi. And so it's probably going to be Google and one other player. Maybe Anthropic, maybe xAI. It's not clear yet who the number two is. Google is probably going to be number one. But basically what this is going to do is this is going to make LLM providers decide, do we want to pay for training data? We're already unprofitable. Do we want to fork out even more money for training data? Some of the marginal LLM companies are going to say, we can't afford it. We're going to have to shut down. So that's what that is going to do. Okay, so I mentioned that I discussed what China is up to, why China is such a threat to US-based LLMs. They're using distillation, which is a training technique. It's a cheating technique. China tends to cheat, unfortunately. They tend to cheat a lot. They steal intellectual property. That will come back to haunt them eventually. That's going to come back to her. You can't go through life hurting, inflicting pain on others to benefit yourself. You cannot do that permanently. But right now, this is what they're doing. They're using distillation to train their AI systems, and then they're selling access at a huge discount because they didn't have to pay for the training. They're using distillation, which is a shortcut to avoid lengthy, expensive AI training. If distillation is done without permission, it is stealing from the large language model company's training budget. And those companies spend millions and a lot of time training their systems. The US government is getting ready to impose sanctions on China for this distillation, okay? The US tech industry is going to install blocks to prevent this from happening. I'm not sure what those details will be, but they will do it. It's sort of like cheating on a test in school. You show up in class, you didn't attend class the whole semester, you show up on test day, you try to sit next to the smartest person in the class and copy their answers. You didn't do the necessary work, you're trying to get the benefit from not doing the work. That's not going to, not only does it give you a bad reputation, but it ends up not working. It's not a good way to advance yourself. The way to advance yourself is to prepare, to commit the time and resources to prepare. In AI's case, that means being willing to pay websites for their data and figure out a way to monetize and get a return on investment. But distillation is not, long-term, it's not a viable way to make a success. So that's kind of what's happening in the stocks today. Google announced earnings. People were hopeful that that would lift the mood of the market. It didn't. They lost almost 5%. SpaceX is down to $115 a share. The semiconductor index, the AI chips, is in a bear market. So things are tough right now. And if the people behind AI systems don't figure out how to show a return on investment pretty soon, there will be more culling, more reduction of the number of players in that space. So if I missed anything, let me know. And if you're one of the people who have lost because of the current environment, we feel that, we're all experiencing that. So hang in there, and best wishes to everyone. If I missed anything, please feel free to add comments and let us know. Everyone benefits from people's opinions and perspectives. If you have any questions, please ask questions in the comments. I'll try to help. And I really want to thank everyone for watching. Have a great day.